All right, we are live. It is Friday, April 21st. I feel like this has probably been one of the busiest weeks in the Tesla and Elon world. Really pretty insane just to see everything that's been accomplished. I'm actually outside of Brownsville today. And, I'm going to give a Starship update, but we're going to have obviously our regulars. I think Joe's going to join in a little bit. But we have Jeff Lutz, our supply chain expert and all things supply chain. He is the expert there. And then we have Amy.
Hi.
Amy is an early day investor. She's been around the block as far as all things Tesla and really provides. I feel like you really provide the take 10 steps back and really look at like where this company's headed perspective. So Joe should join us in a little bit, but before we really just dive in, I thought it would be really cool to just tell you about my experience. So for those that didn't know or haven't been really following this week, I came and visited Boca Chica specifically for the launch. It happened on Monday, but obviously got called off. I couldn't make it on Monday, and so Thursday, if they did it, was going to be the day. And for me, for them to be able to come or to be able to come to Starbase, I have to step back because this is my second time here. But when you come here, when I remember my first experiences, you start to see this, like, it's the middle of nowhere. You go past it's really like right next to the Mexico border. So you have to go past a bunch of inspections. And then next, you're just driving for 15 minutes and then boom, there's like starships. There's this huge sign that says Starbase. And then there's the rocket garden where you see the old 3 rocket ships. And then further down is the actual launch pad. And then it dead ends into the beach. But you're literally, almost feels like you're in the middle of nowhere. And it's pretty insane just to think of, it's just insane to think that you're in the middle of nowhere and they're building something that is potentially going to take us to Mars, to get us to the moon, to do the orbital launch. And the great thing is I think Elon this week really set expectations straight of, if this doesn't blow up in the launch pad, we've won. And, he wanted to set expectations very low, and then also set expectations really low of like, hey, this may not even happen. So from there, it became one of those things where Thursday we had the launch, got up early. I watched it from the South Padre Island, and here I need to send. Sorry, I know this is. I need to send a link to Joe. I think he doesn't have the link, so I'm sending this to. Sent the link to him. So I got to experience this in South Padre Island, about 5 miles north. And this is actually where the SpaceX team was hosting their launch party. They had it again, I think on, Monday morning. They scrapped that, obviously. And, you can literally see, it was pretty foggy, but then, you could just see like these lights that are beaming. It's just like these flashing lights with the Starship. And so we all waited. But what was just incredible was people from all over the world, people from all over the United States are coming to this event and just watching. It's kind of like watching a Super Bowl, but something that's free. And what was even more awesome was we were able, as the public, to stand right in front of the SpaceX, launch party and have the same experience as they were. But also, too, I think my expectations were so low that this thing may not happen. That's why I'm still in Boca Chica, because I thought, maybe it's going to get pushed out. I was expecting it to explode. And, they made the announcement of, hey, T minus 60 seconds. And then 60 seconds goes by. And then they did it a couple more times. And then next thing you finally hear it light up. But it's just like all of this, like you see the fire just kind of like blowing underneath it. And then it finally starts, like it takes like 10 seconds for it to finally start going. And then it just starts going and going. And, you just see, you just see this thing going, and it just continues to go. And again, it wasn't until probably almost 40 seconds. It was just continuing to go and go up and up. And then it starts to spiral. But I think that experience of just watching it, the whole thing happen, there's so many, I think in this situation, what's even more important is the learnings that they'll have from this. And not only the learnings, but that's really what is going to be the most important thing. So that was my experience. I mean, the experience was just amazing to experience that with a bunch of people that you didn't really know. I actually saw Ryan the Kilowatts. He was there. We were standing next to each other. I got to experience it with my daughter. And actually, I can show this video. This is actually, so that's funny. It's like here we all are with like, everyone has these like expensive cameras, super zoomed in. And I give my daughter, my iPhone. I was like, hey, I can't hold up both. And so I zoomed in at 9. I said, just hold it there. And what did she do? She probably took one of the best footages. So here, let me just add this to the stream. Let me go to the tab, and I hopefully it'll play, and there should be audio.
Let's go!
So you can literally see a guy. It's funny. It's like I literally handed her my phone, and she ends up taking. She's 7. She ended up taking like probably some of the best footage, especially because that guy's right there just cheering. He wasn't paid. I promise you.
It makes me cry watching it. Like it's super crazy, so crazy cool that worked and it made it off the pad and went up, and like that will bring people to Mars.
Yeah.
Incredible
John, I
footage.
think that video is going viral. I saw it. I'm not connected. Like when I was scrolling through TikTok, learning the latest dances last night, that video came up, and we're not, you and I are connected on Twitter and we talk a lot, but that video came up and it had a lot of views.
Yeah. That's like the one place it has 3.7 million views.
Wow. So, I understand why. I want to watch it again. Like right now.
Yeah. So there's 2 separate videos. The one that's going viral is actually my zoomed in with like my higher lens, but then I posted the other one. But that one actually I should have posted. But at that point, you're just trying to get anything out just because time is of the essence with that type of stuff.
Great
video.
Yeah.
So shout out to my daughter Diana for just pulling it on that video. So
it's pretty awesome.
Yeah, what a cool thing to do with your daughter too. I mean, neither of you will ever forget that.
Right. Yeah, exactly. I mean, there's going to be a lot more test flights, but just to be able to kind of go to the first one and have it.
Right.
Yeah.
I mean, sure, the next one that goes around the Earth and potentially lands on the moon, that's all going to be very important. But it was awesome. And then the other thing too was I was talking to Joe actually last night about it. No one has ever created such a powerful rocket as this. Like this is the most powerful rocket engine ever built. And so the fact that it cratered the launch pad, in better terms, it like makes sense because no one, I mean, obviously, unless Elon was like spending night and day thinking about, okay, there's this much force, there's this much like firepower, and they probably did a lot of homework.
Yeah.
But
I read that the water table is really close underneath there. So any of the things that you would traditionally do would be very difficult to do because of where the water table was.
Yep, exactly. Yeah, so that was the experience. I don't know if anyone wanted to add their thoughts. Otherwise, Tesla's had like a huge week. Lots of news there. And obviously, this is the Tesla Beat podcast, not a Starship. But it was just incredible experience. Super cool. But any thoughts? Otherwise, we can jump into all things Tesla.
No, I just agree. Like I woke up early. I was sitting there watching it, and like the tension was better than any Hollywood film director has been able to ever give me. Like the way I was sitting there on the edge of my seat, and then when they and it looked like it was gonna go, like it wasn't gonna pause at the 40 seconds, and then they stopped it again, and you're like, oh come on, and then it went. It was absolutely incredible, and I am so thrilled for you that you got to be able to be there with your daughter. I cannot imagine. That's an experience of a lifetime, and I definitely have to make it to launch. Like there's
Yeah.
I'm very much so.
And the great thing is it's in the middle of nowhere, so you're not going to get the same experience of trying to watch a launch in LA or even
Right.
Avril,
Florida.
Like, yeah, like this is like the great thing is that this is like, and it's all stuff that's open to the public, and you could even show up late, like, you know, get there an hour and a half before and still be able to make it literally in front, because we're not like hoarded up in like a concert room or something, right?
Yeah.
So that's what
Kind
makes
of
it
a big
special.
thing.
Sorry, what'd you say, Jeff?
So it's kind of a big thing going up in the air, so you can kind of stand like miles apart almost and
Exactly.
see it. So
Yeah.
the biggest stage in the world.
Understatement.
And
Yeah.
there's this also too. Shout out to the Rocket Ranch. I didn't go there, but they created this whole experience where I think you pay and you can go, and like NASA, I guess, lines up there. You go on a boat for 30 minutes, and then you go to this ranch, like literally in the middle of nowhere, 5 miles away from the other side. So South Padre Island is you get the water into the to the launch, and then on the other side you get more of like the dirt into it, but still really cool. But again, it's just a cool boat experience, and so there's several things that you can do because they close that whole road. But so there's several experiences that are just really, really cool that you can do. So, well, cool. Joe, welcome. So glad we were able to work it, and I was able to send that and see your message. But lots happening. Tesla earnings. There was even price increases last night. It's just nonstop. I was able to look at the results. I was not able to actually listen to the call because I was headed to Starbase. But I would love to, just get everyone's perspective on what you heard, what you thought, and really just, any things that really stood out that potentially that you would want to call out.
Yeah, my thinking has changed a bit. Like there was during the call. Well, first off, I saw the earnings release, and then there was the call, and then I've had a couple of days to think through it and kind of look through some more of the data. Because when I first came up to that call, it was kind of like, okay, the short term view. If you're trading in and out of the stock, or you've entered a position pretty recently, the short-term view, there wasn't a short-term view that was, favorable, that was presented on that call. I mean, gross margins are under pressure. However, I mean, EPS and revenue were pretty much in line. And that's like the first two things that kind of get looked at from a headline, from an earnings perspective. But there was a couple of things, on the call, like for the short term, you're like, okay, a little bit stressed in the short term. But as I was kind of leaving the call, I'm like, okay, the long term is probably 12 to 18 months out. But my timetable, since I've thought through that on the call, has come in a little bit. And the nuggets from the call to me that were very meaningful were really around when they talked about there's some Q&A around commodity pricing. There was and timing and percentage on and off spot contracts. And there was some, and this is again a little bit wonky. I promise I'll come back out of it and I'll say what it means to me. But the thing that that was kind of coming into this call that was under the most conversation was gross margins. It turned into a referendum on gross margins. And what I took away was short term under stress. And I've always kind of viewed this as a coiled spring. When you take MSRP action the way they've taken it, you don't go blow for blow, like one for one, like right away. But if you look at their cost reduction regimen and how they're approaching it, I believe this is a coiled spring for some short period of time where there will be some compression. But after that, I think it's actually going to revert. There were extreme views like coming out of the call, and this is what happens. This is what happens with people, and the biggest thing and was just the difference in interpretation of and that's why I go back and try to read the words, like what did they say? But like a lot of us interpret and hear different things based on our background or based on how bullish or bearish or how short or long term you're in the name. But in summary, I would say short-term pressure, but I liked the discussion around a couple of things. One, the price reductions will continue and probably accelerate, especially as these commodity roll-offs continue. Two, the Cybertruck being pinned for Q3, and there was some, caveats around it, but it was pinned, that was one of the things I thought a lot about since the call. And if they're handing over the first vehicles in September, we have no idea the amount, but that production line's got to start a certain period before that. The supply base has got to start a period before that. And to me, that also speaks to what we may be seeing from an inventory perspective as well. But I like the proximity of the Cybertruck being imminent in here, and I like the prospectus of the volume and the production rate coming out of the end of the year coinciding with this commodity roll-off could be pretty exciting. It's going to be difficult to predict. I would say, from being in this type of position where you're asked, like, how many will you ship and what will the cost structure or what will the unit economics be, X period of time from now. This is the most difficult thing to predict when you're in this kind of macro environment. And the other thing is they don't have a stagnant shipping profile. They're just constantly moving up. And when you marry those two together, it will make it more difficult to predict. So my only kind of thing, okay, what I would like to see them do is just acknowledge that and just say, it is difficult to predict, but we think it's going to be, kind of in this range. But I'm pretty excited about, again, where I see us going from a cost structure and new product launch perspective. And by the time the Cybertruck's rolling out, I think it's going to answer a lot of the questions around advertising, because that's going to be a rolling billboard in the street. And then we're going to be within a year of Gen 3.
Yeah, no, that's a really good point. I think for me, one of the things that stood out was not only that leading up to this, we knew it was going to be margins, but it's just like everybody just forgot that Elon had stated that it was going to be about moving units, not about moving margins. It was just going to be about moving the units and trying to just complete the dominance of just getting the vehicles out, right? Like, everybody just blanked that. Everybody just forgot about that part, that they are just really about accelerating the world's transition to transportation. So I think that was what stood out to me. So I already knew going into it that the margins weren't going to be the same. I mean, it's impossible. You can't keep the margins the same when you're lowering the prices, even with everything that they have going. But the fact that they are almost double what everybody else is on average, and it was still come on. And Wall Street's so petty, but yeah, no, I was impressed with everything they were saying, and the fact that Elon had to ask for a crystal ball so many times because people kept asking him the same questions was hilarious.
Yeah, before Amy jumps in, I wanted to make one comment of it's one of those things where it's I feel like Tesla's held to a different standard. Here they are with 19.5% margin, and that's still not good enough when the rest of the industry is laying people off, stopping production, like Ford, stopping their production line because of battery fires, declining. And here, the great thing is at least I think I saw a tweet, and you all can keep me honest. I feel like Elon still said there's a path to to 2 million. And so, he's still keeping that, but sure, they're going to play with their pricing, just to get volume out, because again, their goal is, as Joe said, to get us to a sustainable future, get ICE cars off the road, not more Rivians. It's that's not the point. Their competition is ICE cars. And so that's my only thing, is that there's always just a double standard on how they hold Tesla. If Tesla, maintained a 25% margin, they would have said something else. So, but yeah, we're just in very unknown economic times. I work in tech, and there's just tons of layoffs. I think Disney announced more layoffs. Some CEOs are even saying, we're in an unknown world right now. So, things are going to continue to wane really hard across, the tech industry, and really just a lot of various industries. And so for them to still continue to be able to hit their delivery number and move volume is going to be pretty mind blowing just to see them do that. So, but yeah, that's my thoughts. But to you, Amy.
Yeah, I have to say that to your point, John, about the different standard. One of the things that really stood out to me on the call was when Elon Musk was talking about the reason why there hasn't been a successful startup before Tesla for like 100 years in the auto space was because of the fact that Legacy was able to bring their margins down to zero on cars and then mark up the price of parts. And that this business model that they had, that they were able to do that, made it impossible for a startup to compete. So Wall Street is very familiar with this business model. Wall Street has been valuing and crediting Legacy with this business model for years. And even if you put FSD, we don't know when the full solution is, there's still a high take rate on it. And then if you look at the supercharger network, that's certainly a source of income as well. So when Tesla says we're going to unlock future profits doing this, and then Wall Street's like, oh my God, that's so out of the ballpark. Like, we can't even put a valuation on that. We don't know what to do with that. It's like, oh, come on. Of course you know what to do with that. Of course you know what that is. And I think we've talked before, and I've talked with other people about this. I always thought that the price cuts preceded the cost dropping off. And I knew that the margins for this quarter were going to be compressed. I thought the margins for next quarter were still going to be compressed. And then after that, we'll start seeing things ramp up. And I also kind of knew that there would be a lot of angst around that. But, when you're invested in the stock for the long term, stocks don't only go up, and you have some quarters that are not blowout quarters. And so if that is the reality, which is going to outbe the reality unless you're doing short-term trading, and even short-term trading, things can take you by surprise, then the question is the management team, are they getting ahead of the problem? Are they reactionary in the way that they're responding to it? Do they have a plan that puts the business in the best possible place on recovery? And what Tesla is doing in this regard, I find exceptional. Being in an industry that myself, in the airline industry, that goes through cyclical shocks, I can say that if a business is in a strong enough cash position to be able to keep the production lines going, to be able to keep the supply chain going, and to be able, because there's going to be this massive pent-up demand, to capitalize on it when you exit the recovery, the massive amounts of market share that they take, the massive amounts of profit that they take, it's like you can pull forward sales, and it's almost like what they're doing is they're just deferring a little bit of mass amounts of profit for the inevitable recovery when nobody else can produce cars in the level that Tesla's going to be able to produce them, because they're still building factories, they're still hiring people, and they're doing massive supply chain deals. Well, Jeff, you've been in the industry through multiple downturns. So what would you say about that?
Yeah, no, it's great. I love the points. Yeah, this is this period I've built. We actually ramped. There's a great discussion on Twitter about Android and iOS and the comparisons to Tesla EV and ICE. And yeah, we ramped a new secular product called smartphones inside of the existing product architecture, which were non-smartphones. And what happened during a recession is, like, in the boardrooms, there's a lot of people questioning. We questioned ourselves, like, should we be buying all this capital? Which is the same question everybody's asking right now in terms of EV. Like, should we be outlaying all this capital when interest rates are pretty high, and there's uncertainty of demand? And it all kind of came back to the product and what the product did for consumers, and then it was just so much better than what it was replacing. And in the end, it was the right decision to capitalize smartphones, and it literally doubled and tripled. I kind of look at that as kind of the EV take rate out of total auto. And when you have the secular grower inside of that, again, this is what people need to understand. Like, total auto could decline from 15 million to 14. I was just looking at the March SAR, by the way, because there's a lot of confusion around, hey, March, SAR, which is the retail component of auto sales. It's like, how many people actually purchased a car from a dealer in March. And then there's equations around it. It's an estimate, but long story short, it's up 10% year on year. But now what are you comping to? You're comping to last year when they said, Total Auto had supply issues, chip shortages, you name it. So I had to go back and look at multiple comps, but basically it's kind of all over the place, to be honest. There's not a clear comp. You go back to 2019 is where you probably get more of a clearer comp. So this is to Amy's point, kind of a difficult, unpredictable time to build product. But fundamentally, I agree. I do like what Tesla is doing. I think, again, we all see the comms from the call differently. There's things that I'm just kind of reading into thinking from a COGS perspective. But I actually wanted to draw it back to the beginning of the call, because one of the things I noticed as I thought more about this conference call is kind of the tie-in of how Elon is managing the team. Like when I look at Starship and I look at the expectation setting that he did on Starship, having that he had that Twitter space and a couple days before the launch, I think on Sunday, and he really set the expectations of a win here is basically getting off and clearing the launch pad. And one of the things I've noticed with Elon over the last 5 to 7 years in the management team is they've really started to adjust how they set expectations. And I believe there's a parallel to what was just done on Starship to how he's setting expectations, not only economically for the company in the near term, as well as the expectations on Cybertruck, which I know Joe put a lot of content in the deck and we can talk about. And I'll come back to this topic when we talk about Cybertruck, because I think he's doing something very similar.
Yeah, I think before you go, I was thinking to myself, like while we were having this discussion, like just looking at where Tesla is right now with the rest of the auto industry, you realize that even knowing that we were heading into a recession, even knowing like all these headwinds were happening, and Tesla's still doing what they're doing. I mean, and you've seen the numbers, like I think the year prior, like Toyota was at 10 million, and now they're at 8 million. Sales in the year, and all of regular auto industry is like falling, and Tesla just gradually going up. And people love to look at their market share, but what they don't count for, and I was going to make a tweet about this, what they don't count for is the fact that like 4 years ago we were saying, oh, it's less than 1%. Tesla's less than 1% of all auto. Even in the United States now they're headed to 4%. Like it's like like that, just like they're looking at the wrong market share, just as like Elon and Zach were saying on the call. Like it's not about EVs. It's not an EV market share. It's an auto industry, and what they are just chomping at that market share of the entire auto industry. So, I mean, it's freaking crazy. And just knowing that, what I wanted to say was, if Tesla is struggling this much and they're still the most successful of everybody else, just imagine what that means for the other companies. Like, it's rough.
Yeah, I think it was.
One other thing. Sorry,
it,
John, go ahead. No, I was just going to say one. I mean, if you look through my Twitter feed, a week won't go by where I'm comparing Tesla to GM or Ford or whatever, or other players. But one of the things we all have to keep in mind as investors and people that follow the name is the multiple that Tesla is given in the marketplace in terms of where its stock trades versus where they're trading. There's a reason why Tesla is being held to a higher standard. I just think it should be fair, and sometimes it's not fair all the time with how the name is covered, and you'll hear me talk about that all the time. But just one thing to keep in mind of when we're comparing the companies, they're literally trading at single digit multiples, and we don't want Tesla to go there. And there's no reason Tesla should go there from a growth perspective and from a technology perspective and where the company's going. There's no reason for Tesla to go where they're going. And I think that's actually the big like battle in the marketplace right now in terms of like how people think about the name. Is it going more towards that direction or the other direction? We want it to hold and earn its multiple and continue to grow. But there's a difference in how they're looked at, and for a very good reason. Just stack the company side by side. look at debt, look at their capacity, and look at what, and look at what their EV capacity is. And I just keep going back to the first quarter came in at over 7% EV as a percent of total auto. What does that mean? It means it's growing another 50% from the year prior in North America. And who has all the North America capacity on EV? It's almost like 70 or 80% Tesla in terms of like the capacity to put product out there. So just keep all that in mind.
I have a couple of things. So when you look at, I usually don't like to talk about stock price, but it is relevant right now because what's going on. So Wall Street is already discounting their goals for Tesla significantly to account for exactly this type of thing. So even though they're valued at a much higher level than legacy auto, if you look at 2030, when that is part of that price target is what does Wall Street think the stock is going to do? In 2030, on average, is 6.5 million vehicles that they think that Tesla is going to deliver, and it's only $21 billion of energy. That's what they have in the stock right now. So even with this earnings call where the margins are under pressure, but Tesla says we're going to continue our ramp, you can very easily get to numbers that are very significantly above what Wall Street is forecasting. So I think that that's why, despite people's worry about the earnings call and how much and how long does Tesla have to take the margins down, Tesla has the cash to be able to do that. They're not actually in any way jeopardizing their future growth and their future plans and where they end up in 2030. And a lot of the analysts, no matter what they did with their short-term price targets, are like, this is better than we thought that they were going to do. I've actually already accounted for this in the stock. And these things are all very relevant to Jeff's point. Toward what Joe was saying, I think that's really, it's really an interesting thing. And right now, the Tesla Model Y, and we're very new in the quarter, and we said the sales environment, we don't know what's going to happen. But right now, the Model Y is on track to beat the RAV4 and become the best-selling SUV in the world. And it's an EV, but over ICE and EVs, it would be the best-selling EV in the world. And it's also tracking to beat the Toyota Corolla as the best passenger car in the world. So if you want to look at what the good news is, this kind of coming out that was being obscured by the margins, that's part of it. We heard the 4680 ramp, that the factory was, the cathode factory, I said now I believe like 75% complete. So that's going to be a very significant driver of lesser cost when that factory is done. We heard a teaser on a new energy product, and I would like to hear Jeff respond to his question that got answered. That was really significant information, where they were going to make it easier to connect the Megapack to the grid, which has apparently been a pain point on that product. And so Tesla, being Tesla, has innovated and gone ahead and they're fixing that. And then I'll just do a little preview of what Jeff said, but in response to energy, there was, we're not so sure if it's going to be bigger than auto and revenue. And I took that as a complete excitement about knowing what the Model 3 Highland looks like. I mean, if those pictures that were leaked is actually what that car looks like, you took an already gorgeous car and you gave it like supercar vibes. I mean, it is incredibly beautiful. And I think that, like they were saying, that Cybertruck's going to change the demand and be a rolling boulevard. Same thing with the Highland Model 3. And then if you look at the Gen 3, the Tesla management already knows what that car looks like. They have an idea of how people are going to react to that. And I was just, they're sandbagging it, but I was kind of sensing that very underlying layer of excitement that if you just stick with us when this, that car is mid-2024 might be coming out, the whole situation is going to change. So I'm interested in your comments on that.
Yeah, I did ask the energy question. I think it was 1 or 2 in terms of votes or shares behind whatever. I was interested in that because they made that claim, and I'm actually glad that they clarified the claim. And I do agree with you. I don't. It's like when you're launching an industry that big, you're not going to know. You just know it's substantial, and like they know like, this is the thing. I remind people this all the time on Twitter. Nobody knows Tesla's backlog except Tesla, and they know the demand behind their products. That information comes in every day, and I know. I mean, Elon said the Megapack demand is basically quasi infinite, and it's really about scaling that factory. By the way, a big portion of scaling that people think of like scaling Megapack is all about like, can you put more batteries into these cases and can you get them on trailer beds fast enough? And what Drew kind of clarified on the call is like, look, we have a supply base to ramp to get to this 40 megawatt. And, you know, that's really going to start like improving in the second half. By the way, if I were them and the commodity prices had kind of peaked at the end of last year, I don't know how high I'd have the crank turned on the ramp, because they know their price sensitivity and what they can charge for a Megapack, but that's maybe for a longer, wonkier discussion. But I think, you know, we're learning like what we had some questions answered on energy. It's about the supply base ramp and Lathrop's coming up, and of course during the quarter they launched Shanghai as well, and I think there'll be multiple Megapack factories. So nobody's really there's very few analysts that are actually inserting the right data and thinking around what Tesla is doing in energy, because you have auto analysts and you've got a different set of analysts that cover energy that really don't cover the name Tesla. So I'm pretty excited about that. And one more point I wanted to hit. I'm glad Amy brought up the new Model 3, because I think that's going to be a big piece of Tesla's strategy in the second half. People were focused on the price cuts over the last couple of weeks, but what they didn't talk enough about is that Model Y standard range being put on the configurator. I believe that this is going to consume more of the Tesla cost structure story in the second half. Is not going to be about cut. I think there may be more, but it's going to be more of, they're going to be purposefully placing product in the portfolio with the value per dollar being better, like lower cost, but better value per dollar for consumers and better gross margin structure for Tesla. So I think the Model Y standard range and the new Model 3 are going to be two answers to that are, I think, are going to really help the portfolio in the second half.
Amy, were you going to say something?
Sorry. Yeah. Well, sorry. Yeah. One more thing on that is that, you know, there's a worry out there that the only way that they're going to drum up orders is by cutting price. But we already saw one move that was not cutting prices that will, I think, eventually turn out to be significant. And that is Tesla is starting a direct B2B fleet business. They have a configurator online now for cars out of Shanghai. They've made a specific fleet product, and they are starting a significant fleet business. And if you're a fleet operator and you're really concerned about total cost of ownership, and if you have a Tesla, you don't have to do anything but change to your windshield wiper fluid for years, and you have dispatch reliability, this is going to be a huge driver of orders for Tesla over time. And then there's a comment on maybe last earnings call, a couple earnings call before, that Tesla was not significantly into the leasing the vehicles business, but that was a demand driver or lever that they would be able to unlock and pull in the future if they needed to. And that's just a couple of examples of this. So Tesla has many different demand levers that they can pull. They're looking at it and they're trying to be strategic around what their production is, around the production ramps and everything else, but it's not going to be simply cutting price. And then it's going to be what Jeff said too, and what Joe said, like when the Cybertruck comes out, it's going to completely change this picture. This is completely.
Yeah. One of the other things that the fleet, just 10 seconds on the fleet thing, as an OEM, what it gives you is it gives you an outlet from an inventory perspective. You have this valve at the end of the quarter where you can kind of bunch all your fleet deliveries and do them as kind of like one large. So if you have too much inventory of one thing, or your factory is too much inventory of another, like you can actually batch and do fleet builds and shipments together. And it actually helps you from an inventory management perspective. Sorry, John.
Yeah, I think, Amy, you had kind of said this. I mean, I think the fact that the fact that Tesla can cut prices and still, again, have a healthy margin that is unseen in the auto industry. This is a tweet that he popped off on last week, and he pretty much was saying, we're not starting a price war. We're just lowering prices to enable affordability at scale, especially during an insane recession that we're in this unknown world that we're in. It's not about them just, playing with prices. They've always done this. I remember there was months and months of people tweeting when it was happening, where people were like, wow, my Tesla is actually growing in price. Like, I can sit at home and like my car's becoming worth more. And what did we see happen instead is used car prices were at all-time highs. Dealership markups were at all-time highs as well. I think some of the people, there was like 100,000 markup one time I saw on like a Corvette. I mean, this, like, that was the peak, and then obviously now we're in a downward turn where the opposite is happening. Companies like Carvana and companies like CarMax, they're all struggling as we went to this insane peak in tech in the same way, right? Record profits, record revenues. You had this peak, and then we're literally going down because it's like, it wasn't just a steady growth. It was just like insane upturn, insane downturn. And so I think that the fact that they can still drive volume during this insane time and these unforeseen, this kind of, unforeseen economy that we're just trying to navigate through, they continue to execute. And again, the fact that they're going to just continue to drive volume, and it's going to be huge. So
it's a purposeful playbook. Those three words, affordability at scale, what he's doing during a slowdown, what Tesla is doing during a slowdown with those three words, that's a playbook. That's an economics. That's a unit economics playbook, which is, if I can keep my gigafactory utilization high, like over 80%, that means I can keep my supply base utilization high and over 80%, which means I can continue to tap them for cost reductions. And oh, by the way, as the demand for goods is going down from a macro perspective, but EV is growing secularly, I can capitalize on the cost downs of commodities coming into my high utilization rate suppliers and into my high utilization rate factories. So it's actually, I believe in the second half, and I believe going into the next year, that this is being undercalled and not looked at properly. And there's a lot of history, and there's a lot of people that know this, that this is a playbook. This is how actually companies fold during a recession or a slowdown, is their utilization rates drop. That means their labor efficiency and their capital efficiency drops, and they get swallowed by their fixed cost structure. That's how it happens. So this is how Tesla prevents that for them. And again, they have a tailwind, which I'm sure Amy likes that term, but they have this tailwind of EV percent of total auto growing. They have that tailwind behind them, and they know they have that.
Yeah, and I think I like the analogy you gave, where kind of like when you're talking about the iPhone and Android, and how we all know that the amount of EVs to be sold, and really just cars to be sold, that Tesla can do, it's the product itself is going to speak, and that number is kind of exponential in a lot of ways. Obviously, we know it's like 14 million, whatever some of the numbers are, is like the auto industry is declining. But at least right now, we know that the demand for the product, especially if they keep lowering prices, and who knows, I don't know when they're going to potentially, announce a compact car. And who knows, maybe that even gets delayed given this recession that we're in. I really don't know. But, just the ramp that you were mentioning on the Android and the iPhone, there's enough customers that need it. It's just about making it affordable, right? We all know, like, people love the Tesla when they get into it. And the new wave of people, and as Amy was even saying, they've been winning all of these insane awards, the best luxury vehicle. They beat out the Camry, the Toyota Camry, which held the crown for the longest time. They're about to beat out the RAV4 and even Corolla. These are all crowns that even before Toyota was kind of coming around in the US market, that the legacy auto was just sitting on their crowns and they didn't do much. And then what did Toyota do? They came in, they made the most reliable car, and they still make amazing cars that are reliable and that are affordable. And then Tesla just kind of came in and pretty much did the same thing, right? Is just built cars that are quality and built to last. They're not building a service model where you come in and just add this. I'll do this last plug, but I spent some time with the founder of Lightship, and he worked at Tesla for several years, and they are building the first all-electric RV. And their goal is to make something that's built to last, where it's actually like this vehicle or this RV could be something that's handed down from one generation to the next. And I think that's how they built. And he got that culture from Tesla, that they want to build something that can last as well. So I think, one thing I did want to mention too here was the price drops that we did see. The Model Y, shout out to Sawyer for always just being on top of it.
So many slides in his deck have Sawyer.
Yeah, I know. So so I personally subscribe to him just because, I want to support what he's doing. But they drop prices. I think the insane thing was that the Model Y and Model 3 are now, with tax incentives, are under 40,000. So again, when you look at the total cost of ownership, now it's actually becoming, we already knew it was like at parity, but now it's becoming even more affordable. Like over the total cost of ownership, you're actually going to be saving money now. Like,
right.
Kind of already knew. It's just becoming, the gap is just becoming more and more apparent. One question I had for y'all was like, did they make any statements on really just, sorry, it's slipping my brain. I forgot what the question it was I was going to ask. It might come to me, but so I'll just skip that. But
no worries.
Yeah, so these cars are just becoming more affordable. They're, as you said, Jeff, affordability for scale. That's the playbook. They're not folding. They know that these gigafactories need to continue to ramp. So what are they going to do? They're going to drop prices. And thankfully, they have such a healthy margin, 25 to 30% historically, that they can kind of weigh into or eat at to really continue to just drive that volume. Right.
So somebody had tweeted this, and I thought it was interesting that with the prices dropping down, hopefully this makes the Cybertruck not so expensive. Maybe it comes more in line with like 5 to 10 grand above whatever they had mentioned or whatever. So I thought, it's something to think about.
Yeah, I mean, I think that's an insanely good point, Joel, that it's looking very likely that Tesla is going to hit that original pricing or somewhere more in the ballpark of the original pricing when they announced it. Whereas, the height of the COVID supply shock, it looked like there was no way that it was going to be even close. I mean, people were talking about the Cybertruck being priced at $100,000. And now it looks like it's going to be, they're really going to focus on an affordable price. That's something that the vast majority of people that ordered it are actually going to be able to afford, which is exciting.
That's a lot of orders.
Yeah. They're gonna ramp their supply chain and their factory and all these new processes, building the highest margin Cybertruck SKU. So probably I would guess they would start with the higher trimmed models with multiple motors and so forth. And when you do that, you wring out the portion of your supply chain. You still have to build the portions of your supply chain that are for the lower trim models while you're building the high trim models. So they're going to get their yields and they're going to get their efficiencies and their line velocity at a point using the model that they have the most pricing power on. I believe Tesla's going to have pricing power for years on the site. Well, they have it now actually with their cars. If you really think about it, they really do have pricing power. But on the Cybertruck, I mean, I don't think there will be a Cybertruck available in the market for sale in terms of for years. So they're going to have ultimate pricing power when that product launches. And I don't know if they're getting enough credit for that. It's not just going to be another pickup truck type launch. They're going to have the kind of pricing power that, there's a reason that Ford only built 15K of the F-150 over the last year. I think that's surprising to a lot of people. They had 150,000 or more reservations for that. And they only really built 15K, and they actually went down in production volumes. But again, not to talk bad about the competition, but it's there's a reason for that. And I believe Tesla's just
Yeah.
going to have pricing power. By the way, they've taken the prices up on the F-150, I think up 15 or 16K. And the word on the street is it's basically, dying from a demand perspective, but we'll see.
Shout out to Omar. I think he, again, feel free to fact check me, but I think he put out a tweet that Ford EV margins is negative 40%. And Tesla's is 19.5%. So if you just look at that, again, what these companies are having to do is they need to fund this transition as they make a whole new production line. So not only is their gas business, their ICE car business struggling, but they also need to fund this insane ramp for EVs, which is clearly losing lots of money. So they don't really make money on, it's already one of those things where they don't really make money on their cars in general because the dealerships make all of that, which is a different story. But the dealerships are the ones making all the money.
Right.
Whereas Ford is, they're barely making anything, or all these legacy auto companies are barely making any money. And then now you're losing something at negative 40% margin and maybe even more. So, pretty insane to see that.
Well, that and the fact
I have a theory.
They're not even in all the
Go ahead.
I was just thinking about the fact that there's so many, like what Amy was saying about demand levers, right? And the fact that all this is happening and they're not even in every single market like all of the legacy auto is. They're not even in half of that areas.
And what Joe says plays in with inventory, because the more nodes you enter, the more inventory you have to carry to serve those nodes. But I was just going to say, I actually have a theory about, I think it's pretty well founded too, about legacy's autos entry into EV. They're going to have their Gen 1 vehicles. These vehicles that are out now, I almost call them kind of like Gen 0. Like they're these hobbled together supply chains. They don't really have a supply chain to build anything in meaningful volume. But when they have, like when Ford has their battery plant here and GM has their Ultium plants going, I believe that's their Gen 1 that is kind of comped off of the 2017 Model 3 and the 2020 Y. And I believe their Gen 1 is only, and they've publicly said this, in 2 and 3 years, they're only going to have mid-single digit gross margins. And I think it's actually aspirational, but we'll see. I believe they're actually going to have to scrap their Gen 1 approach to building EVs, and they're going to have to redesign their entire approach from their supply base all the way down, because it's not going to be set up. It's not going to be set up to ever kind of ascend meaningfully in gross margin, and it's always going to be a stressed business for them. So I actually think they have to go back to the drawing board. I don't think what they've designed as their approach in 2025 and 26 is actually going to service them, and that's one of the reasons I see them actually pushing it off.
I have one quick thing to say, and a couple of the positives on the call is they reaffirmed 1.8 million cars, possibly 2 million, and they reaffirmed their ability to self-fund this massive expansion that they're about to undertake. And they also kind of backed that up with the slide in there about their own software that they've used that takes over all the software as a service that most business companies have, that is in-house Tesla, that gives them immediate, accurate, real-time data between departments. It allows them to have a very quick iterative feedback and innovation loop. It allows them to ramp and know where their supplies are. It simplifies their logistics, and it allows them to bring on new employees or do new products at very low incremental cost, because they're not having to go out there and buy one new employee 10 licenses to be able to access all the software. And Jeff had a very super interesting response to my tweet about that, which I would like him to go into, about what they do with in building factories with the software.
Yeah, it was just around. Amy, I thought that was a really good tweet, and it's such a. I'm surprised. I'm surprised you actually. I mean, to call that out. I mean, it's a very kind of wonky thing with how product and factories are made, and I'm glad you called it out. It's so super wonky, but the only thing I think I'll say, because it's so important, it is their approach to the way that they actually build and test the car, they have this iterative approach as it's going down the line. A lot of companies, when they build consumer or discretionary electronics, they have a lot of test equipment that comes in and gathers information about the product and pulls itself back out. I believe what Tesla is doing, they have a lot of onboard testing that they're doing, and a lot of self-calibration and self-test that while the product is going down the line and there's nothing meaningfully happening in terms of movement in or out of the vehicle to assemble it, it's actually self-testing itself and calibrating. And that I can't, I mean, I actually could put a dollar figure on it if we thought about it, but it's one of the things that a lot of companies don't think about. And all of that data is all seamlessly kind of tied into their systems, and it's useful for them probably all the way from production to the warranty and service network. Like, how did this thing perform in the factory, and are there any service issues? I believe they connected all their systems together. For most companies, that's kind of the euphoria, panacea thing to do, and you're buying all these different software packages from all these different companies who are competing against each other. And the fact that they're doing it in-house is a very powerful thing. And their OpEx, as Amy said, they're gonna reap the benefits on that from an OpEx perspective for many years to come. And I would say 0.1% of the people that look at the name would never call something out like that.
Right.
Great call out.
Definitely. Well, I feel like we could be going for hours. I mean, there was just so much that happened this week.
There was so much we didn't even get to.
I know, that's the thing. It's just like, well, yeah. So a couple of things I just wanted to shout out. This is hot off the press last night. Again, shout out to Sawyer for breaking this. But the S and X are up $2,500 in the US. They're offering 3 years of free unlimited supercharging. I know that is a huge life hack. I have it lifetime on my car. So it's really a huge game changer. And then I think this was Canada. I didn't really read out. Yeah. Oh, Canada. I thought there was one other one. Oh, I guess it's something that we didn't mention was this is something Sawyer had put out too, was that Tesla is constantly listening for feedback. And one thing that they've adjusted was there no longer is the S and X coming standard with the yoke steering wheel. It's now coming with the round steering wheel. Yeah. And so, I think they obviously were very innovative by pushing us all to a yoke steering, but they're clearly listening to the feedback. They're clearly listening. So actually it's $250
for the yoke now.
Exactly.
I think that's a huge controversy, by the way. Less material and more cost.
Yeah. You know what the crazy thing is, as somebody who drives a yoke, like, it is way better. You don't even realize it. I mean, John, you know too, like,
yep.
Like, once you go to a round wheel, it's really kind of weird afterwards.
It would feel like my airplane. I would love it.
Yeah, exactly. The original yoke.
Well, awesome. I think we're at the top of the hour. I just want to give a quick shout out to our amazing hosts here that join every week, that keep you updated on all things Tesla. I think each person here brings their own perspective. We did have Starman visit. Joe came, so I guess I'll start out with giving him a shout out. Give him a follow. He manages and runs the San Joaquin Valley, president and founder there. Just a great guy overall, all around. Early EV adopter as well. We have Jeff, our supply chain expert, the Jeff Lutz. So give him a follow. And then he's obviously our supply chain expert and just adds a ton of knowledge, especially when it comes to margin, cost of goods, and just all things in that space. And then Amy, really, I think you just know all things in and out pretty much.
I'm just Tesla obsessed.
Yeah, exactly. And again, it's the timing of when you came was just really interesting too, because I think the stock was falling off a cliff, and you came out of the woodworks and just started really just dropping amazing knowledge. So
Amy has a cape. She has a cape.
Yeah, you can't even see the cape right now. So give her a follow at SF3_ Tahoe. Again, we appreciate everyone.
I apologize for that.
No worries. It's all good. I think there was it took me a couple of weeks. I have it memorized. It's 3 underscores, not 1 or 2.
Go figure. No one had taken that.
Exactly. It's just, it's how you split your time, right? But one quick thing I wanted to do is give a quick plug on the Tesla Takeover. We have May Musk as our keynote speaker. This is happening July 29th through the 30th. It's a 2-day event. We're going to have content sessions, Tesla influencers like Kim Java, Sandy Monroe, Gary Black, Ross Gerber, and a ton of additional people as well that are coming. We're going to have a women's panel. I know Amy's going to be on that as well. We have Original Roadsters. Aptera may be coming through too. We'll see again on that. We're going to have a huge exhibitor expo, a ton of kids activities. There's going to be a camping zone, even a camping content session. Ride and drives. Tesla's is going to be there in some form. So, please get your tickets at teslatakeover.com. It's going to be a great community event. So please, come and join us. There's more happening. I mean, we're just still months away, 2.5 months away, it feels, but lots happening, lots of people coming from all over the world. So it should be a great one. But thanks again for joining the 4th Tesla podcast. Make sure you like and subscribe our channel. And again, I appreciate the hosts for giving their time each week. All right.
Thanks, everyone.
Great to see you guys.
Have a good day,
care.
everyone. Bye.